Africa's economic landscape is shifting again. Central banks are adjusting policy cycles. China is opening its market to dozens of African economies. Infrastructure investment continues reshaping export routes. And regional diplomacy remains central to Eastern Congo's security situation. This is Africa Weekly Record. Verified developments. Structural context. Regional diplomacy remains central to the evolving security situation in Eastern Democratic Republic of Congo. The region has experienced recurring conflict involving armed groups, cross-border tensions, and humanitarian challenges. Recent diplomatic discussions have focused on stabilization efforts involving neighboring states and international institutions. The United Nations and regional organizations continue supporting negotiations aimed at reducing tensions and improving coordination between governments. The situation remains complex. Security challenges in Eastern Congo intersect with regional politics, economic interests, and humanitarian concerns. Diplomacy, therefore, remains one of the primary mechanisms through which governments and international institutions attempt to stabilize the region. A few additional developments across the continent this week. Several African governments continue exploring mechanisms to expand infrastructure financing through credit guarantees and blended finance partnerships. Export logistics investment remains active in multiple mineral-producing regions as governments seek to strengthen transport corridors linking mines, rail systems, and seaports. Meanwhile, discussions around global trade access and economic diversification continue shaping policy debates across African capitals. Taken together, these developments point to a broader structural trend. Africa's economic positioning is evolving through a combination of monetary adjustment, trade diversification, infrastructure investment, and regional diplomacy. These shifts are gradual, but their long-term impact may prove significant. Several African central banks signaled cautious monetary adjustment this week as inflation conditions begin stabilizing. In Malawi, the central bank reduced its policy rate by 200 basis points after inflation eased from recent peaks. The move reflects growing confidence that price pressures are gradually moderating across West Africa's CFA franc monetary zone. The BCEAO also lowered its benchmark lending rate. These decisions do not represent aggressive monetary easing. Instead, they indicate the early phase of recalibration after an extended tightening cycle aimed at controlling inflation. Monetary policy cycles rarely reverse suddenly. Central banks typically move gradually, testing financial stability conditions while monitoring exchange rates, capital flows, and domestic inflation expectations. Across Africa, the emerging pattern suggests that the peak of the tightening phase may be passing. The next phase is cautious adjustment. China announced this week it will introduce zero-tariff treatment on imports from 53 African countries beginning in May 2026. The policy expands duty-free access to Chinese markets for a wide range of African exports. This includes agricultural goods, manufactured products, and raw materials. While the announcement focuses on tariffs, the broader significance lies in trade diversification. African economies are increasingly engaging with multiple global markets simultaneously, rather than relying on a single export destination. China has already become one of Africa's largest trading partners. China has also expanded tariff-free access could increase export opportunities for several sectors. However, trade policy alone does not determine export growth. Infrastructure capacity, logistics networks, and production systems remain equally important. Market access creates opportunity, realizing that opportunity depends on production capability and transport infrastructure. While global trade partnerships expand, continental trade architecture continues developing within Africa itself. The African Continental Free Trade Area, known as AfCFTA, remains the largest free trade project currently underway on the continent. The agreement aims to reduce trade barriers between African economies and expand intra-African commerce. Regional organizations such as ECOWAS also continue consultations aimed at strengthening cross-border trade coordination and regulatory alignment. The goal is not simply tariff reduction. Trade architecture requires customs cooperation, logistics infrastructure, and regulatory frameworks that allow goods to move efficiently across borders. In other words, market integration depends not only on policy agreements, but also on transport corridors, border procedures, and institutional coordination. Infrastructure investment remains central to Africa's export capacity and industrial development. This week, the World Bank approved financing for a credit guarantee vehicle designed to mobilize additional infrastructure investment in South Africa. The mechanism is intended to reduce financing risk for large infrastructure projects and attract additional private capital. At the same time, mining companies proposed a new manganese export terminal at the port of Nkura. Such terminals increase the efficiency of mineral export logistics and expand capacity for bulk resource shipments. Rio Tinto also confirmed the restart of the Zulti South Mineral Sands project. Together, these developments highlight the continuing role of infrastructure in shaping export capacity. Ports, power systems, and transport corridors determine how efficiently resources and manufactured goods reach global markets. Infrastructure therefore functions not only as construction activity, but as the logistical foundation of trade. Across trade, monetary policy, infrastructure, and diplomacy, structural shifts continue shaping Africa's economic landscape. Africa Weekly Record examines these developments using verified reporting and institutional sources. Context before conclusions. If you found this briefing useful, explore the other Africa Weekly Record analyses on this channel. Return next Sunday at 5 p.m. UK for the next briefing. Writing as Remembrance. Reclaiming Africa's Living Spirit. Ray.